Hi, this is Rusty Squire, qualified intermediary at 1031 Property Exchange. I'm here today to show you exactly how the 1031 exchange process works so you understand it. 1031 exchanges are used by individuals, entities like limited liability companies that own real estate held for business and investment purposes, and have held that real estate for at least 1 to 2 years. The benefit of a 1031 exchange is that you defer all of the federal capital gains, state capital gains, depreciation, recapture, and ACA tax. In most states, this means you'll save 20 to as high as 40% for each dollar of gain. So how can you calculate gain in a property? It's a rather simple equation that is your initial purchase price plus any improvements minus depreciation. And here's the deal. That 20 to 40% is a lot of tax. And once you've given it to the government, you'll never get it back. It's like Albert Einstein said, compound interest is the eighth wonder of the world. But there's no compounding when you lose principal, ever. 1031 exchange can become a tax-free way to transfer wealth. Consider that the federal estate tax for 2020 doesn't even start until $11.58 million in total assets for an individual and $23.16 million for a married couple. Very few people have much to worry about here unless they're in the ultra elite and top 1% of all U.S. households. 1031 exchange is an extraordinary way to build tax-free wealth. Imagine what this can do for future generations of your family. Its powers are enormous. So let's talk about the process when you want to do a 1031 exchange. It's rather simple, but let's go through the steps together. First, you decide to sell an investment property, not your primary residence, except in very limited cases. You get an accepted buy-sell agreement on the property and deposit it in an escrow at a title company. Right now, this is the time to get in touch with the 1031 Property Exchange qualified intermediary to act on your behalf. What you need to furnish us is a copy of your buy-sell document, your primary taxpayer address, and a signed exchange agreement so we can set up your qualified escrow account. At 1031 Property Exchange, we act as both the qualified intermediary and the qualified escrow agent for your exchange. Once you've emailed us a PDF copy of your buy-sell, we'll begin to create all 6 necessary documents to help complete your 1031 exchange. It's important to understand that you cannot come into constructive receipt, meaning possession, of cash or real estate during your exchange. We helped one client in 2020 avoid almost $1 million in taxes when they were about to take possession of a $100,000 non-refundable earnest money deposit from a title company. This would have been a very costly mistake and triggered all of the tax on a transaction that was worth north of $4 million. Once we have your buy-sell and information, we'll prepare all your exchange documents and email them to you in an Adobe PDF, which you can open on any type of computer or phone. All you need to do is print these documents off, read them, sign the signature pages, and return them to us via email. We will require a signed copy of the 1031 exchange agreement signature page before we can open your qualified escrow account. This is the next step in the process because we have to have a qualified escrow account in place before we can send closing instructions to the title company. Once the closing instructions are received by the title company, we have them provide us with a copy of the settlement statement to review and sign. At this point, we are complete and good to go for the first leg of your 1031 exchange. On closing day, the title company wire transfers your 1031 exchange equity into your qualified escrow account. This is also the day that your 45-day identification clock starts ticking, along with your 180-day total exchange period clock. Remember, if you paid off a loan on your relinquished property, you'll need to replace that debt on your replacement property if you want a totally tax-deferred exchange. It's not just the equity that you need to reinvest unless you have no debt. In the next 45 days, you'll need to provide us with a list of identified properties. We do not recommend just listing properties that are for sale. Make sure you get an accepted contract on properties prior to that 45th day. And this is very important because you cannot go back and re-identify property following the 45th day. So if something sells and you don't have a contract, the IRS has no exceptions. When you do get an accepted contract on a replacement property, get it to us immediately. It's very important that you send your deposit in from your qualified escrow account. So we'll need to contact the title company and get wiring instructions. Do not let a realtor talk you into writing a personal deposit check when you're in a 1031 exchange. Those are all after-tax dollars, and all of your money in the exchange account is pre-tax. So exchange money is a much cheaper source of funds. This is an error we have to fix on a regular basis in exchanges. Once we have your replacement property contract, we'll wire in the deposit and send closing instructions to the title company. Next, we review the settlement statement and get their wiring instructions. Once we send back the settlement statement, we will then be set up for the wire transfer from your qualified escrow account to make sure it occurs on closing day. Once the replacement property transactions are complete, your exchange is over. And if you're like most of our clients, you will have saved tens of thousands of dollars in federal and state capital gains taxes. That's why we love what we do. All of our clients make a significant amount of money by using our services. It's what makes it exciting to get out of bed and go to work in the morning. If you'd like a personal consultation, then simply call me, Rusty Squire, at 406-425-2742. Thanks for watching.